Hello friends, this is PhillipCapital India and I'm going to share the weekly technical commodities outlook for the period 19th of August to 23rd of August 2024. This is a weekly chart for gold futures, and as you can see on the charts, since April 2024, gold is within a range of 68,000 and 75,500 zone. Earlier, few weeks back, we have seen a sharp cut on the weekly charts from the highs of around 73,500 to the lows of 67,000 odd levels. But that cut has been compensated to an extent in last 3 weeks of range to upside bias and move. Last week, gold future ended at 71,375, up 2.1%. And even for the coming week, we believe that the counter can be looked for buy on dip over and above 69,750, 70,000 support level with a potential target come hurdle at around to 72,000, followed by extended 73,500 in next few weeks. Overall, the bias is range to pull back as per the weekly time frame, but the higher levels like 73,500 and 75,000 plus levels can witness once again some kind of profit taking. So long hedged strategies can be looked into this counter with a long bias, keeping strict stop losses below 69,750 or 700 levels on a closing basis. For the coming week, the important levels are 70,000 support, followed by 68,500 major support, and 73,250 and 75,600 as hurdles. The outlook will remain as buy on dip and sell on rise at the mentioned levels. If we talk about silver future, last week it ended at 83,213 levels. It formed a kind of bullish weekly candles, closing at its almost highs, giving a firm closing. It was up 3.3%. The counter is expected to witness a range-bound movement with a slightly positive bias with buy on dip outlook and sell on rise at a higher resistance level. The important point to note here in silver is that it has a very strong support at around 78,000 levels, which remains a major trending support level for next few weeks to months for the silver, holding above which the bias will remain buy on dip. On a short-term time frame basis for the coming week, important hurdle will be at around 85,000, 86,000 zone, and the important support will be at around 82 and 8,500 zone. So this support dips towards 82,000 to 81,500 can be looked for fresh long bets, keeping stop below 81,000 mark. And on the higher end, we can expect a move stretching towards 85,000 to 86,000 zone where a fresh supply cannot be ruled out. Crude oil witnessed a cut from the highs of 67.36 to the lows of 63.50 last week. It ended marginally in red. And as we can see on the charts, it's still within a range with downside biased within a triangular contracting pattern. The bias will remain range to down till the time it is trading below 6,800 mark. Sell on rise can be looked, keeping strict stop losses. 6,800 and 7,200, these are the important hurdles below which the bias will remain sell on rise. On the lower end, 6,000 and 5,500 will be looked as an important support on a midterm time frame basis. For the coming week, the bias will remain range to down and sell on rise can be looked. The hurdles and resistances where one can look for initiating short calls will be at around 6,600 and 6,960 levels, keeping a strict stop loss of 100 points. Dips towards 6,180 and 5,850 can be looked for contra trading long bets. Maintain stop of not more than 100 points for these swing trades. Copper witnessed a pullback in last couple of weeks. We have seen that it has tested the support of 765, and yes, last week closing was well above 800 mark, up 3.2%. So we can see that it as per the charts around 760, it has a decent support. Initially, a pullback was expected from these levels, but at the same time, the pullback is expected to encounter with a resistance at around 820. And if that is being taken off, the next best case scenario can be 860 once again, which can be looked for contra trading short. So 820 and 860, these are the resistance levels for the coming week. Initially, Move towards 820 can be looked for contra trading shorts. Keep the stop of not more than 10 points. 830 can be looked as a stop. And the next extended target thereafter can be 855, 860, which can again be looked for contrast trading short bets, keeping stop over and above 865, 870 levels as per risk appetite. Initially, dips towards 778 can be looked for fresh longs. Last week closing was 801. Buy on dip towards 778, keeping stop below 770 can be looked as a swing trading opportunity initially for this week. If you find our content relevant, you can contact us through our mail ID mentioned here and the contact details given for our future reports, trading ideas, and outlook. Thank you very much.